From one retail investor to another, good afternoon. This is Trader72. I hope you are all well on this fine afternoon. It's the end of another short long week because obviously of Easter last week, but we're already coming to this point where we are looking forward to the weekend. So today's show is all about breaking down Visa. Now, I've got these on my portfolio. It is one of my chosen ones. I bought a small amount to start off with, which is my usual strategy before you buy into a stock. Always dip your toes, as they say. And today we're going to be looking at the company itself, the fundamentals, the growing regulatory problems or pressure from various different European countries about potentially the monopoly that MasterCard and Visa Card have got. Also, on the other side, more to home, the base of Visa in America, where Trump wants to obviously use a cap on interest as well. And, you know, various different battles, legal battles that Visa are having at the moment. It's really about understanding the business and also whether or not, as me, and please, obviously, I am not a financial advisor of any kind. I've learned this through just purely experience of becoming a small retail investor. So please do not do your own diligence. I'm only here as an advisory situation or person, and really about whether or not I feel it's a buy or not for Visa, and at what entry point, if it is a buy. So is it a buy, is it a hold, or is it even a sell for this point at this point? But as you've probably already discovered, I've already bought into Visa, so I'll give you a little bit more of an insight about what I feel is potentially right or not about this company. I mean, let's be honest, it's a massive compounder, and we all know that. So without further ado, let's kind of start with the initial understanding of the business, which obviously everybody knows what Visa is, and Visa and MasterCard, who have a massive duopoly there within that market. They are so big that really they're part of the establishment in that respect. The business model is obviously transaction and service based. So Visa makes money for like a toll on a motorway for every time you use that credit card between yourself and the merchant. How does that experience work? Obviously, you pay directly the merchant, but obviously this would not be happening without the transaction of Visa in that middle ground. So there is obviously various different services that you should be looking at: service fees, data processing fees, and international fees, which obviously they make a lot of money on. And we'll come to a bit of a breakdown of that in a minute, and we'll see how that all breaks down in terms of fundamentals and earnings. In terms of moat, now we all know that I like a moat. It's very important for any companies I invest in. Obviously, the 4Ms, which is, as I said before, Phil Townsend's favorite criteria, which I think really is important to have in place. And again, you can make it your own in your own way and what you think you feel is a criteria. All four should really tick before you go forward. Obviously, these are meaning, moat, management, and obviously the current intrinsic price or the sticker price, and also a kind of a financial criteria of what the company should do to pull off the going forward with the investment. So the network effect, especially from the mode point of view, is a Visa. I mean, as I've highlighted it here, is useless without the merchant, doesn't accept it. Merchant won't accept it if the consumer doesn't carry it, which obviously the consumer being yourself. It has over 5 billion cards in circulation. The switching cost of the global economy to move away from Visa is nearly insurmountable. So that's the fact that the moat is bigger than the moat, and to invade that moat and the castle of Visa, it would take a huge amount to change the financial system around the world. Literally would have to change it. So that is a massive plus for someone like Visa, and obviously reason why it's such a massive compounder. The fundamentals. Now, obviously, we'll come to that in a minute, but just to give you a quick outlook, this from a boring point of view of the charts, I'll show you something a bit more sexy in a minute. Revenue-wise, it's up, obviously, year on year, currently at 37 billion. 5 years ago, 28. Before that, 21. So you can see it's, you know, it's second to none. 10, 11, 13% income. Net income is obviously up from 11 to 19 billion. Profit margins gone up pretty much in the same similar vein between 50 and 52% profit. I mean, that is, any business that does 50% profit is incredible. And obviously free cash flow, the most important part of the business, as I again mentioned here. I feel like I'm an old man. I am an old man repeating myself, but the free cash flow is all important for the business, going in from 12 to 21 billion over the past 10 years. So clearly it is a business that stands for itself even, should I say. Market cap versus EV, obviously market cap, the actual entire company worth $615 billion versus an EV of 620 billion. So there's a little bit of debt there, but minimal really for a credit card, just due to the fact that their numbers are so amazing in terms of staggeringly high. Debt to equity is 0.55. As you well know, anything under 1 is healthy, so that means they can pay back their debt very quickly. And the other most important bar, the actual free cash flow, is the ROIC, the return on investment. That is the all important. This obviously enables the company to pay off its debt or its dividend to its dividend shareholders, or to expand in terms of capex. So this is the lifeblood of a company, and it's currently at nearly 40%, call it 40%, which is 4 times the 10% minimum required by myself as an investor, or any investor that requires that return. Interestingly enough, the actual P ratio as well, and it shows you how much cheaper Visa is at the moment, at 29 versus a 5-year of 33. So it's quite impressive there. So let's get to the charts of Visa, just to give you again a quick idea of how to break down the business. Services, as you can see, services and numbers. So this, as you can see on the left hand side there, services is currently at 4.8 billion. That's 18% year on year. Data processing at 5.5 billion. International transactions, which is obviously another big income for Visa, is again at 3.7 billion dollars. I mean, it's a staggering amount. The net revenue is currently at 10.9, so call it 11 billion. Obviously, it has its operating expenses, but Visa prints money, as it says there, 50% profit. It is a staggering profit, any business. I've run a few businesses myself in the film business, and trust me, we do not make that kind of money in terms of profit. If we're lucky if we make 10%. So that is a staggering amount of how to print the money. So it does rely obviously on various different processes there. Payment volume is almost immediate. We'll come to that. Also, cross-border volume, which obviously across all countries, it is staggering. Really is. So there's the EPS. So the EPS there currently at the moment, as you can see, year on year is moving up from Q1 there, 7% to 15% to 11%, slight fallback there, maybe in June 27. So again, EPS beat for pretty much every quarter. And it just never fails to amaze me in that respect. So again, the EPS change for 27 is looking pretty bright. Obviously. So there you go. So this is the Visa EPS. So surprise and estimate by quarter. As you can see there, the Visa is quarter from quarter is certainly moving in the right direction there. 7 to 15 to 11%. So again, mighty impressive in terms of that side. So that's the kind of basic fundamentals of Visa in terms of revenue, profits, and the breakdown of the business. Now, what is some of the issues we've got with Visa? We have various Visa, and that's probably always a reason why the stock price is down slightly. It is currently at $305 a share. It was averaging anything between $325 to about $360, $70. So clearly there's been a change. We'll go from this. So the litigation recently settled between MasterCard and Visa Card.
Visa and MasterCard have announced a $38 billion settlement with retailers who accused the card networks of charging too much to accept their credit cards. Under the settlement, Visa and MasterCard would lower their swipe fees by about 0.1% over 5 years. The credit card companies say the deal would lower costs for both merchants and consumers, but some retail trade groups are pushing back, saying customers and business would actually end up paying more. That settlement still needs court approval.
So that's obviously one of the litigations just settled recently, which might help, will have obviously a bit of an effect on the bottom line. This issue with the Europeans and pushing for their own credit card and moving the duopoly of Visa and MasterCard out of the way. So let's see what this chap says.
Explaining what payment providers, technically known as payment service providers or PSPs, actually do. When you make a transaction using your credit or debit card, you're basically sending money electronically from your bank account to the seller's bank account. But first, your transaction has to be facilitated by a payment service provider, or PSP, which is a third-party company that acts as an intermediary between merchants and banks. PSPs essentially manage and streamline the entire transaction process, providing online gateways like checkout portals, as well as security measures, fraud protection, compliance with regulations, and other services like currency exchange. They also enable businesses to accept a wide range of payment methods, including credit card, debit cards, bank transfer, or digital wallets, via a single platform. However, the issue for Europe is that the continent's existing PSP network is dominated by American services, namely Visa and MasterCard. Visa and MasterCard together process about 2/3 of all card transactions in the Eurozone, according to the European Central Bank, with a number of Eurozone members currently lacking a national alternative to the US providers.
So this is again one of the reasons why I think the Europeans are pushing back, because of the dominance of the two there. So that is obviously to be seen and to be checked out eventually, and maybe do your own due diligence a little bit further. I mean, this is again the Europeans trying to push for something, a dominance. Nobody likes to be dominated by a specific country or credit cards, and I think this is a slight pushback on the Americans and potentially Trump as well. So I feel that, for many years, MasterCard, everything is on MasterCard or Visa at the moment in terms of machine and financially. It's it's woven into the fabric of finances across the world. So I think it'll be a tough love for them to move that across in that respect. Now, the next issue, obviously, is Trump's cap on the credit cards.
About this proposed 10% cap on interest rates charged on credit cards. It's unclear how and whether it's going to go into effect, but how are you thinking about what effect it could have on these companies?
Thank you, and you're right. We were hoping to have a more focused conversation about what the fourth quarter earnings, but this news certainly takes priority. And at this point, it's going to be very interesting because it's our understanding, obviously through an executive order, the credit card companies are not going to be required to lower their credit card rates to 10%. It either has to come through legislation in Congress or codified through the regulators, similar to the Credit Card Act of 2009 that came through Congress. And so it is certainly weighing on the stocks today. Clearly, this president understands we're obviously have midterm elections, and as we saw with the election of the mayor in New York City, costs of living is a real talking point for the Democrats. And so if this is a way for the president to try to bring down, the costs for consumers, it's a political strategy.
So yes. So again, is this a power play with mid-elections coming up in the US, or is this a genuine attempt to try to cap the credit cards to keep the cost down? But again, most people buy credit cards or get into credit cards to have an uncapped credit, so they can actually buy more or consume more. So the fact that a cap doesn't make a lot of sense to me on any credit cards at this moment. But again, even if it went through from the logistics point of view, it would have to go through a Senate. When I know the Senate is quite keen on trying to tame down the credit cards. They've had obviously a monopoly for the last few years. Again, it's the same situation as the European situation. They want to try to tame the beast and the spread of the cards. And I think this is potentially something that is slightly swerving in the air, and whether or not this will happen in terms of, again, the fabric of the financial behemoth that the Americans are, or worldwide, I think it would be very hard to detract the whole of Visa and MasterCard services and implementation of the software and move them out for another competitor. So I think whether or not Trump manages to get through this, I don't think he will. You don't know, though. However, you never know. The man is stubborn, and the man can get what he wants. He is the president of the United States, but I think it would take a lot for it to get through. So.
About this,
in terms of the bull case for this, so let's get to the bull and the bear case on this. Obviously, Visa captures 20% of the global business-to-business cross-border, adding 10 billion plus to the top line. The war on cash in emerging markets is obviously something that will maybe accelerate in the next few years. We've already kind of touched on this. The bear market is regulation in the US and the EU forcing a cap on interchange fees, permanently lowering margins. That it could be an issue. Local real-time payment systems like India, UPI or Brazil Pix gain enough traction to bypass global railing. I mean, that again would be something quite a big mountain to move from, really. What are my final thoughts? Let's get to it, because obviously I don't want you guys to get too bored about my dulcet voice here. Final thoughts. Now, I'm going to categorize this as it says in big there. This is my own thoughts I've put down on paper. It's, I think, a buy for Visa. How many chances will we get to get Visa at this price right now as this compounder? I don't know. It could fall further behind. Yes, there could be further litigation. Yes, there could be a cap on interest rates, and Europe getting its act together to maybe move into the category or move a credit card or a new credit card name into the market. But I think that will take time. And will Visa be around? This is the question you've got to ask yourself. Of course, Visa will be around. Visa is, like I said, part of the fabric of the world we live in and what we spend on for every time you use that plastic friend. So are very strong. The margins are amazing. The PE ratio is currently down. We are also, which I will show you in a minute, in terms of the actual price range. So the discounted cash flow model. Now we're going to go for what is the actual true worth, and I know you've heard me say this so many times. The actual true price of Visa, not the market price, which is, obviously there, but the actual true price of Visa as it stands. Now, I'm going to go for it says at the top, this is all about the growth rate. I think 10% is about 12% is about right. It has been over a period of 5-6 years, 5-10 years, anything between 18 to 10%, and I think 12% is a reasonable amount with a discounted rate of 8%. The reverse DCF, which is what the market are pricing in, is at 7.4 in terms of earnings. So that is quite cheap, considering that 12% growth is pretty much in the ballpark. So there is room for growth there for Visa to move forward from that reverse DCF. So once we spit out the discount rate and the terminal rate and the amount of shares outstanding and the free cash flow, we are looking at the moment at an intrinsic price of $416. Currently, it is at $308, which gives us around pretty much currently about 3.5, about just over 25% discount on the stock price. So again, going back to where I feel this could be right. So in terms of the entry point, we'll come back to that in a minute. I think, like I said, I've put in red what are the alternatives in terms of what is going against it. Again, like I said, please do your research in terms of what, if you see there's other potential issues there that I maybe don't have time to go into too much, but that gives you a pretty much regulatory pressure, credit card competition, litigation reserves, and so forth. But Visa is a definition of slow and steady indeed. It is a massive compounder. It has a legal monopoly, and it is certainly a buy for me for Visa. I've already bought in at 314. I would suggest, though, that if you were to buy, and again, please do not copy me, do your own due diligence. I'm here as to purely advisory. I would suggest that 295 to 300 would be a great entry point, which will give you another 2 or 3% discount, which would give you possibly around 29 to 30% discount, which would be massively decent. It has fallen back to those numbers recently, so it's definitely worth maybe a little wait and see where the market goes from there. But I certainly think that is worth a punt. In terms of the chart, as you can see, when I mean that, it's obviously above its 200-day moving average. This time I've said it in one word without messing it up. For some reason I've got an issue with the 200-day moving average, but there you go. And the purple one here is the 50-day moving average, which obviously is slightly below. So it's in that range. Now, is it looking at a bounce? Well, that is obviously down to the market and the company itself and some of the issues that are ongoing in the background. But I would suggest that at the moment, looking at the Stoich and the MACD, which are both momentum gauges, are definitely down and oversold. So maybe a little bit of patience is required here. Like I said, bought at 314. I'm currently down by about minimal amount, and I'm definitely going to be buying more, but I think below 300 would be the sweet spot to buy. So let me know what you guys think at the bottom, and go there. So that's my Visa analogy at the moment in terms of analysis, and a little bit of a deep dive in terms of numbers and what are the current issues and why the price is where it's at. That will give you at least a bit more of an idea. But I think Visa is a terrific company, as is MasterCard, which I've not even touched on. And I think for the future, if you were to look at a slightly more defensive stock away from some of the SaaS issues out there or tech companies, Visa would be a great alternative. But again, it will be depending on consumer spending, what goes on with inflation as well, and the rest of what I've touched on. So listen, guys, let me know in the comments below. It's always good to know if you think this is right or not. Swiftly, moving on to the news of today, just to finish off this week, because this will be my probably last upload for the week. I'm going to be away for a few more days next week, so this could be my last one for a few days. I hope you can live without me. Or not, I don't know. Joking, obviously. But currently, the NASDAQ and the US 30 are flat, pretty much 136 points there, not going in any direction. CPI came in a little bit stickier, but pretty much unexpected at 3.3 year on year. So an uptick in inflation there. So that doesn't look too good, but obviously expected with the oil situation. Let's have a quick look at what they say at the moment in terms of news.
Good morning, everybody. It is Friday. It's the 10th of April. Here's what we're talking about. Risk assets give the ceasefire the benefits of the doubt ahead of talks in Pakistan. Oil's been choppy and Hormuz still isn't open. Plus, hard data on global inflation starts to reflect the war.
Israel has kind of agreed to stop bombing Lebanon with Hezbollah, but not sure. It all seems very flimsy and on the verge of one way or the other. And I think that kind of reflects the markets as we're seeing at the moment, that they don't really know which way it's going. Oil is fluctuating between 94 and 100, not really much more above that. As you guys know, I've got a short position on oil at the moment at 92, which I bought a few weeks back. Still holding on to them. I still think oil will eventually settle down below 90 easily once this is sorted. But this will depend on the talks today, and I would have thought into the weekend. So probably quite a bit of action. So it might be worth keeping an eye on the news, guys, for this weekend. In terms of the rest, my portfolio is as it stands. As some of you may not know, I bought into Uber, a small position yesterday at 71.5. So slightly down at the moment. So I thought it was a good time to buy back in at a 50% discount, which I think is possibly some of the best discount I've got on my portfolio at the moment. I've had further falls on Adobe. It looks like the SaaS are being absolutely hammered again. I don't know why. It's all based on rumors and headlines. And my Adobe has currently dropped again to 225. So it's really not looking good at the moment. And it's pretty much very much down on my account value. S&P Global, I'm waiting on the moment. Looks like it could be a sweet spot to buy back in. That's probably a story for another day. And my Visa is pretty much as is at £306. The dollars, sorry, I keep saying pounds, and not really moving in any direction. So that's pretty much it. So we'll see what happens over the weekend. Let's see what comes of. I hope you guys enjoy. Please make comments on this. I'm still not getting enough comments from you guys. Always good to hear, even if I've made a mistake or two or not, or agree with me, or might even agree with me, who knows. And please subscribe and like. So let's keep it on the market. Let's see where this goes. Let's hope for peace. It would help everybody for sure. And we can live in a better world, so to speak. I feel like a song coming on. From one retail investor to another, this is Trader 72, over and out. Have a great weekend, guys, and speak next week when I'm back. All right, take care.